Oil prices slip with Chinese demand in the doldrums. Welcome to Market Insight. I'm Elena Casas. Brent crude has been sliding again this week as Chinese data showed the world's second largest economy continues to lose momentum. In July, industrial output there slowed, home prices fell and unemployment rose. Elsewhere, OPEC Plus producers are expected to start unwinding one layer of their output cuts in the next quarter, which could put further pressure on the price. Well, joining me now to talk about all that is Viktor Katona, lead crude analyst at Kpler. Victor, hi. Let's start then with China. The oil market seems unconvinced we're going to see much recovery in demand there.
Well, absolutely. I would say even that China has been one of the biggest bearish factors out there. Month after month, disappointing economic data. Oil imports into China are effectively in decline territory compared to 2023. And it doesn't really feel like there's a good, strong, robust case. Even the third plenary, which a lot of people expected, that would be the final breakthrough. Even that didn't really bring about any massive change to what we're seeing. So I think China has been the main driver of global oil demand growth over the past couple of years. I think we need to adapt to a new reality when it just starts to peak and there's no growth whatsoever in China for the upcoming period. I think that's very much the prospect for 2025 and 2026.
We've also, Victor, seen limited impact on oil prices from supply worries around conflict around the world, although a ceasefire seems distant in Gaza and Ukraine has made a major incursion into Russia. Why isn't all this having more impact?
Well, it should, because if we look back to the past couple of months even of 2024, geopolitics, there was always a geopolitical risk premium attached to oil prices. But what we see right now is that the market, for instance, expected an Iranian retaliation for the assassination of Haniyeh, the Hamas leader. Nothing happened. Gaza ceasefire, this isn't the first case that there is a Gaza ceasefire being discussed. It's the umpteenth time that we're talking about it. I think the oil markets have just grown tired of geopolitics and effectively the war risk premium that was in the prices priced in. It's no longer there. And effectively the end result, Brent is where it is, below 80, and just lacks the strength and lacks the robustness to break above 80 again. And again, we need a good geopolitical risk premium to develop again if for the oil bulls to see oil above 80. I don't think that there is one right now.
What do oil traders expect to see in the next quarter then? We do expect some unwinding of OPEC Plus's cuts. Could that mean the price falls further?
Well, absolutely. OPEC Plus is effectively caught between the dilemma of fulfilling its own promise and effectively a demand environment that's becoming much more difficult to manage. So in case they do bring back the production that they've effectively promised in the previous OPEC Plus meeting, they're going to flood the market with more supply. But if they decide to withhold that, if they decide that, guys, let's postpone the unwinding of the cuts into, say, 2025 or even 2026, the market's going to effectively translate that as them acknowledging that demand is genuinely weak. So there's no easy solution for OPEC or OPEC Plus on the table. Whatever they do could be effectively translated into layman terms as them acknowledging that the market is weak. And I think that's very much what both Riyadh, Moscow, or any other member of the OPEC Plus alliance, they understand this. And it's a very fine line that they need to walk.
What about the potential impact, Victor, of the Federal Reserve starting to cut rates in the US and the consequences that will have around the world? Could it potentially be more encouraging for demand?
Oh, yes. Absolutely. If there's one bullish topic that could develop this week, it would be the Jackson Hole meeting where Jerome Powell could provide some support, something for the oil bulls, for the believers who still think that 90 for Brent is possible this year. At least from that Jackson Hole conference, something could come that ultimately feeds that momentum. Because right now it's a very bearish environment. Supply disruptions around the world have effectively dissipated. The economic outlook for China, the largest growth of demand for the past couple of years, is very weak. So it doesn't really feel that we have a strong case for the oil bulls.
What do those oil bulls want to hear then from Jerome Powell at Jackson Hole?
Well, definitely, if there is a potential outlook for not just one but several interest rate cuts in 2024 still, I think that's not priced in by the market. That could be a very positive signal. If some of the U.S. economic data that would come afterwards support this, that the interest rate cuts could be much more robust than the market could potentially anticipate. The potential for economic recovery into 2025 would look completely different than how it looks right now, because the EU inflation data that we've seen, inflation is growing in the European Union again. That's not good. We need a strong bullish case. The US could be that. The US could lead oil prices out of their current conundrum.
Thank you so much for that analysis, Viktor Katona of Kpler. And that's Market Insight. Don't forget, you can watch more videos on Reuters.com.